All right. So we are live. All right, guys. Yeah, we're doing these lives now in the community, and this is also going to get translated over into the BizNexus podcast, just so you know. For this kickoff live event, joining me, we have David Fairley from Website Properties over in Washington. So welcome, David. Thanks for hopping on.
Thanks, Adam. Thanks for having me.
Yeah, I'm excited for this. We'll definitely do more because your space is not getting any less interesting. For those of you who don't know, David or Website Properties, really popular brokerage firm in the digital space, and he's just been on the front lines of everything that we've seen with this tidal wave of interest that has hit us during 2021 and looks likely to just continue full steam ahead into 2022. But we'll get your take on that, David. Just everything with FBA deals, SaaS deals, e-com, agencies, Shopify, all of it. David handles all of that. Well known in the space, which is why we're here today. So, David, you and I chatted about you helping us understand what's been happening in the market and kind of where it's going, and what an entrepreneur should expect if they're thinking of maybe taking their company to market in this environment. Right. Whether that's this year or after the holidays, you have a lot of people making that type of decision after they sit down with family and decide whether they want to go through, another potential variant or what have you. So, I mean, like, we've got limited time on these things with a format like this. So David, maybe you won't mind if I just hop right into it and start asking a few questions about your space.
Yeah, absolutely. I'm ready for you.
Okay, great. Yeah. So maybe let's just start out talking about why this space has just been so gangbusters for the past year. Like, can you highlight the main drivers that have gone into just anybody and everybody during this great recession trying to buy a SaaS company, trying to get into the digital space, companies trying to get in there, just run with it?
Sure. Well, I think the main driver is, of course, the COVID-19 really accelerated things. People were locked down, forced to be online, forced to learn new software. And, the process of going back to work and whatever their viewpoints were on, the mandates and such, has forced people to make different decisions. And I think that there's just been this uptick of interest and in the online space because of that circumstance. It's been growing year after year because of the amount of entrepreneurs that have started businesses on Amazon or Shopify. All these platforms are conducive to building that long-term growth pattern. But COVID certainly accelerated the situation. Not only that, there was just a huge amount of money that was pumped into the system from through the banking system and into individuals' direct accounts. So that has had an impact as well on the interest. I mean, with the shutdowns of brick and mortar businesses, there was obviously a concern for people that were looking to acquire businesses, started shifting more onto towards the digital universe. And it seems to be much more attractive and less risky. And so I think those are the confluences of circumstances that have really driven the market for the last year and a half. I mean, everyone in the space that I've talked to, the other brokerages, it's a small niche, but there's just a huge amount of volume, deal flow. And really it's actually, for us, it's just, there's more buyers out there sitting on war chests full of money trying to deploy it, looking for good quality e-commerce or digital agencies or SaaS content advertising based sites. So there's a lot of aggregation going on. The big money, the smart money's real, obviously there's no one's making any money leaving their cash in the bank. It's depreciating actually at least 6% with inflationary concerns. So they're trying to deploy it and get a return. And online businesses typically are selling on, they range, of course, for the multiples, but from an ROI standpoint, investors are able to put money into a cash flowing business. Even if they're buying it at 5x, that gives them a 20% ROI. So you're not going to find too many investments out there that are where you own the asset that's driving cash flow. It's an appreciating asset, and it's a great place to get a return on investment. Plus, you can grow it. So, real estate is certainly done very well, as is the stock markets, and but those are pretty frothy right now. There's a lot of risk out there. People are getting a little bit concerned. Obviously, there's been some corrections recently, so it's also shifting risk parameters as well. I think that there's less risk in buying a really solid online business that's proven, that's got 3, 4, 5, 6 years of cash flow, has proprietary elements and branding. It's just where the consumers are shopping more online. They're online learning's huge now. So all of those things again are contributing to this demand that we're seeing, and it's a great time to be a seller. It's a great time for entrepreneurs to leave the corporate world and to find a business that they can relate to and work from home under the circumstances. If they're feeling lack of, with the new variants, who knows it's coming out, it's sketchy. So these things are all supporting the ecosystem that we're in and that we're, in the midst of, between buyers and sellers. So I think that's going to continue into 2022 for sure. And again, I think the big thing one of the conversations I have with a lot of my clients, sellers, is just to, get a gauge what they're, how they're seeing the sort of macro environment with inflation and like again, the COVID variant and whatnot. They have to bring that into their consideration. But I think that as far as as an asset class, it's getting much more popular for diversification.
That's so interesting. Yeah, I mean, you threw a lot at me there. Unpacking, like,
take a breath next time.
No, that's all right. It's all good. We're just gonna have you back because we've only got 20, 30 minutes on these things. But that's good for me because then we can have more content going forward. But I love looking at this as an asset class because it seems like just yesterday, financing was an issue in this space, right? You can't get a traditional SBA loan and it's risky, and now it just seems like there's so much money out there where you have these investors who, anyone who's been sitting in an S&P index for the past 10 years has quadrupled their net worth, and they're looking, where can I put this, right? Despite everything that's happening in the world, stock market's still looking pretty good. And so if you're talking about gold or Bitcoin or all of these other, safe havens, that's a whole nother conversation. That's obviously not a safe haven, but people are looking to diversify. And especially since COVID has hit, we've just seen a flood of people, BizNexus, we have buyers, we have sellers, and sometimes those are both, right? Especially right now. But with the individuals, they're doing exactly what you're saying. They're diversifying. They're taking their money out of the market and they're looking to buy hard physical assets. Maybe they're looking at reevaluating their lifestyle and switching away from their traditional career and having a little more control over their lifestyle and their financial destiny. There's a ton of that. But the difference between those individuals and then you mentioned just the institutional money coming in, that's been a big change just over the past year. Like who are these buyers who are coming to you? Because you do everything from big.
Like there's there's a lot of private equity and family office money that's seeking diversification, and certainly we've been in this game for a long time. The aggregation that's happening, that happened back when I sold my first business, hammocks.com. I sold to Hayneedle, and they were very close in competition with a company called CSN Stores, which became Wayfair. Wayfair was buying up, rolling up a ton of different niche commerce sites. So this whole roll up aggregation process has been going on for 20 years, but it's in the last, I think 3, 4, 5 years, there's just been, this interest in, acquiring businesses that are on these platforms like Amazon or Shopify or have some sort of themes, software as a service or whatever. This is the strategy that a lot of the big money, the smart money's jumping in because they realize they can buy these things at strong multiples for our marketplace, which might be, anywhere from 4 to 7x, I guess, on average. So there's different deals that get closed on either side of that, but they're able to take that in a roll up and go to market and get 40x on it. So their game it's a completely different game, but that's why there's so much, there's so much cash being deployed. Again, it's cheap for these larger companies to get it. They're getting it like pennies on the dollar, really. The interest rates that they're getting charged are nothing. And they're turning around and throwing it into businesses that are throwing off 15, 20, 25% ROI. So it's just, that's where the smart money is. That's where the big money is. And they're pulling it out of the stock market, out of, real estate. I think, these assets are important, but, you don't want to be overweighted. And I just think that the interest in online businesses and digital assets is exploding. And that goes for digital assets and even in, like you said, in the crypto space as well. But there's risk in all those categories. And so this is just another way of diversifying and actually, quite frankly, controlling a stream of cash flow that can be used to then, build the portfolio out and invest in other areas as well. So that's what we're seeing. And there's no sign of it stopping. Like, we have these private equity groups and venture funds coming to us and saying, look, this is our criteria. We're looking for anything that's at least making a 750,000 or $1 million or $2 million EBITDA, in all these different industries. And they're sitting on tons and tons of money, but they're hunting, and you get those requests on a weekly basis. So there's lots of opportunities for sellers right now.
It's like everything out there. There's so many buyers, but even with individuals, like with searchers who typically don't have the funding, but now they've got funding, right? You have we see a lot of individuals come in with real backing. They've got 10 million behind them. They're just looking to roll. Everyone's pursuing the roll-up strategy, and then whether that's someone who's just an MBA and they've raised some capital and their first at bat is now acquiring a company. It's not starting something. They're looking to do exactly that. Just roll up. You do a roll up in the digital space, and then we have seen a ton of people who are just career professionals, right? Like GE, 10 years at a big company, and they, for whatever reason, they're moving on. They've got capital. Maybe their kids are old enough where they have the time to do something like this, and they've got real money. So
honestly, there are people that are still like, hey, is there seller financing? Is this SBA financeable? And most of the deals are, but like when you're approaching a business that's attractive, it's just gone to market. I mean, you're going to be in last position. There's too many people with cash, and no one wants to wait around for 90 days to have something that, underwritten, and maybe not, because they're very conservative and they don't really, there are deals that will pass all the muster, but they can take a long time. I mean, it doesn't happen that quickly. And so cash buyers are able to complete due diligence and close sometimes within 2 to 3 weeks. And so that's obviously going to be a preference over someone that isn't, is trying to get funding elsewhere. So that's why it's a better, the seller's market is so strong right now, just because you can kind of pick and choose who you're going to work with, and you're not going to be on the hook to try and, have to put up 20% and be in second position to an SBA loan or something like that.
But that's up to you. I mean, that's a good opportunity to kind of segue over to the seller. I mean, that's up to you to sift through all these buyers and shortlist the buyers and actually bring those to a seller. So if you're like, for the people who are running companies who are listening to this or watching this in the community, you're thinking of maybe going to market, maybe after the holidays, right? I guess, what should we expect with all of this? I mean, we're going to have a massive crash in 2022, but also if it continues, what do you do? Like at Website Properties, what does a broker do to help that entrepreneur kind of go on about running their business, keep hitting their numbers month to month, which is so important when it comes to getting that final valuation? What do you do to help manage? I know we're going a little off track here, so I apologize. This wasn't in the roadmap for the show notes, but like maybe speak a little bit to how you help that entrepreneur. They walk in the door, you assess what they've got. You're probably working with a ton who you haven't taken to market yet, but get them to the point where, like, this is your buyer, the private equity group, or the searcher who actually has capital. I mean, filtering through all of these buyers that you're dealing with in this market right now, can you speak to that at all in terms of navigating that for your potential
clients?
Sure.
I mean, look, a lot of what we do with our sellers is preparation. Some sellers are just not ready for the market. They need, they have aspirations for an exit at some level. And, if they're not there yet, we're going to say, like, this is what you need to do. You need to, focus on your profitability. You need to make sure your books and your accounting are up to the, to this point. And you need to show if you've got these things that are going to be growth impetuses, and you need to activate those, not tell them, not put in the prospectus that these are all the things that you should do if you were running this. Like, you should go ahead and act like you're not going to sell it. So that's what we're going to make sure that their approach to going to market, their numbers are clean and clear, and they're focused on maximizing the profitability, because at the end of the day, buyers are going to be looking at your bottom line and then looking at the other fundamentals. As far as going to the market and sifting through buyers, I mean, our process is such that we take a business, we create, again, get them. There's a lot that goes into the preparation, so that once we go to market, it's comprehensive. The information is there for buyers, and they can act quickly. And then it's from there. It's basically just answering questions with the buyers that show interest. They request a prospectus. They have to have an NDA on with us. And then if they're, they'll send their questions in. If they're interested in pursuing, they want to usually get on a Zoom call with the seller. And at that point, we're pre-qualifying them, when we're making sure that we understand who they are, what their background is and experience, and how much capital they have. And so we're not like, we're going to filter out the buyers, in that process. We're not going to have to talk to every buyer. It's basically, people have to, look at the business and get into the details of the prospectus and think, to decide whether it's a good fit. From there, they ask specific questions, and then usually if they're still interested, we get them on a call. And like I said, that's just our process. It's not like we hanging out, in a do it yourself place like Flippa. We even, we do list on places like Flippa, but they have to sign NDAs, and we have a prospectus, and we kind of go through the same system there. So it's not really an issue of finding a buyer. We never know who the buyer is going to be, by the way. It could be private equity, could be just an internet entrepreneur that's, that has a portfolio of sites they want to add to, or they're just, they've sold one and they want to get another one. Or it could be someone from the corporate world, or venture capitalists, or publicly traded company. I mean, we just don't, you just never know. Of course, you can go out with certain deals and approach the strategics that we've identified. But by and large, you just never, sometimes it's like you think that the buyer is going to be someone, and it can be completely some other entity or other company or other person.
Yeah. And as one of the few really active intermediaries in this space, I just imagine you've got, you've got the active buyers, a lot of the active buyers in this space already on speed dial.
Yeah.
I already know what they're looking for.
Particularly the aggregators and, in the Amazon or e-commerce space. I mean, we've got dozens and dozens. I mean, we sell a lot of deals off market if they're, if we know it's going to be fit. Like we've got a group in Israel that gets, $1.5 million funded every quarter, and they're consolidating in the Amazon space, and they're not buying, they like, their sweet spot is $500,000 to $1 million. They're not really buying the huge ones, but there's just different companies that are in different lanes. And if the business has strong fundamentals and is well branded and has good solid financial trending, these things they'll just get a full asking price cash offer, and they're closing in 2 or 3 weeks sometimes. I mean, the business in itself is going to, like, if the business is good, it'll sell itself. It does. That's really what it comes down to. We're facilitators. We've been in the industry for so long that we've got a strong network. But at the end of the day, we're kind of a matchmaker for our buyers, for the sellers with these qualified buyers out there. But it's not going to make a difference if the business isn't solid. And so that's really, we pick and choose who we work with. I mean, we can't work with everyone, but it's really about quality over quantity. We're not trying to pump out every deal out there, but really, if people have solid financials and it's trending well, and they've got proprietary elements and good solid branding, there's just so many buyers out there that are just going to jump on it. They're moving really quickly, to some of them.
Yeah. Are you seeing a ton of just maybe well-financed but unqualified buyers? So they've got money, they're looking to get it out of the market, but and everybody wants to buy SaaS, but they have zero experience in the space. And so they're going after the idea of it. They need an operating partner. I mean, we've seen a ton of those.
Yeah. I mean, there's certainly some inexperience out there backed by money, but I mean, that can be cumbersome in a transitional standpoint. Like, you don't really want a seller or a buyer that's going to be super needy and it's going to take months to transition out. I think most sellers are willing to do 60 to 90 days transition period, and there's often a holdback for them to do that. It's, the money's held in escrow, a certain small amount to make sure they fulfill that. But, we look for buyers that are a good fit. I mean, in some cases, some of these family offices or private equity, they want to buy a business and have the operator, the owner stay on and operate it. They want to, or make sure that the team is in place. And so, and then there's other companies that are just like, look, we don't care. We're going to just come in. We've got infrastructure already. We've got people. We've got the economies of scale. So again, it just varies from deal to deal, but there are certainly buyers out there that aren't necessarily operators that might want to, keep the seller on if they're interested. Sometimes the seller is interested, they get a liquidity event and they stay on, and, there's upside incentives. So it just really depends on the deal and the seller's ambitions, I suppose, and also just the quality of the buyer.
Yeah. And in terms of the seller's market, no end in sight. What do you think? Is it dropping off a cliff in 2022? That's how we advertise this. So we've got to.
Yeah. Well, look, I think I think everybody's got concerns. I mean, we're in a 12 years, we've gone from a, bust in 2008 to almost 12 or 13 years of expansion. I think the underpinnings of the economy are sketchy. I think everything's in bubble territory. And, what I experienced in 2007, 2008, and in 2000 with the tech bubble, when fear enters the market, it enters the market everywhere. And so it doesn't mean that businesses can't be sold or sellers can't sell and thrive in these circumstances. There's some businesses that like a lot of the digital agencies, they don't have any drop in their revenues because people, when the bottom drops out, people spend more money on marketing. They have to, they fight to stay in there. But I think that it does have an effect on, in the past, it's had an effect on the number of buyers out there, the amount of money, and just the multiples. I mean, it's always a great party when there's, when cash is flush and there's multiple buyers on every deal. But look, if the stock market has a 40% correction and the real estate crashes, I mean, it's just, pain is felt everywhere. But again, there's opportunities in down markets as there are in up markets. I just think that if a seller is concerned that this would have an impact, those corrections would have an impact on their particular business, then they might want to consider getting ahead, out ahead of that. And, look, everyone's got different perceptions. I mean, there are people that are super bullish in those type of scenarios, and they'll take advantage. They'll come in and buy up things that'll, when people are panicking. And so I don't know, I don't have a crystal ball. I think that there's going to be, depends on what the Fed does. I mean, if they create more stimulus, the markets could continue to go up. If they taper and inflation takes off, we could see a lot of reckoning and a lot of people getting wrecked. It's just, I think that you can't close your eyes to that. Either way, as a buyer, you have to look for opportunities, I think, that will sustain in the change. And also as a seller, I think you have to, consider de-risking. Even some people hold forever or think that they, the balloon always goes up. But I think if there's an instinct to sell and an opportunity to diversify, then that's something that an owner can consider. I mean, just like someone else is buying a business that it maybe is sold real estate or sold out of the stocks and is looking to deploy capital that's sitting in their bank account, rotting away. Cash is rotting right now. They're looking to deploy and diversify. And the same thing for a seller. A seller might have most of their asset value in their company, and they might want to diversify into, precious metals or into Bitcoin or whatever as a store of value if they're concerned about inflation or whatever. So, and have some cash and pay, so there's lots of reasons and motivations for people. But right now, I mean, look, it depends on who you talk to. There's people warning about crashes, and there's other people saying like, we're going to crush it all the way through to the second quarter, into middle of next year. Like, who knows?
Yeah.
You have to, I think you have to look at that. You have to consider that no matter whether you're on the buy side or the sell side, either way.
Yeah. But also in your space specifically, it's like so many people are chasing digital right now, right? There's the COVID factor where, I mean, if we ever had another lockdown, I think inflation would take a back seat and then just start printing money again. And then we're back in it. But with how many companies and individuals have just been chasing digital. Like, there's so much money out there. It's got to go somewhere. What happens? Like, will your space track the general market, right? If there's a crash, what happens with, these types of acquisitions if they're good models? And
well, if there's, I mean, look, there's going to be a lot of these businesses like online education are exploding. People are like, so people don't go to, they stop going to college. Like, usually when in a recession, people go back to college, they study more there. So that's going to go. I mean, there's a lot of brick and mortar businesses and retail businesses that shuttered and will continue to get shuttered. So it's going to push more people buying online. And, that opportunity isn't going to go away. People are shopping on Amazon, and Amazon sellers are doing well. And people that use social media avenues for marketing their Shopify product are, they can use the data very accurately and scale very quickly. And there's just like any good entrepreneur knows that there's opportunity in any market. So you can't, you have to have sort of, ice in your blood. You've got to be calm. And I think you've got to be strategic. And I think it's more risky to be long in the stock market and long in certain, even in real estate to some degree, unless you're, I think I'm a big believer in holding assets and in inflation, like land and property that are really good. I don't know about, all real estate, but I think that's should be part of your portfolio. But I think that for a lot of people now, like, digital businesses are, it's a growth industry, and it's an asset that is providing essentially dividends and cash flow. And, you're getting a return on your investment versus something that's just speculative. If you bought stocks, unless you're getting a dividend, you're just speculating on it going up, but there's a good chance it could go down 50%. Same with real estate. I mean, unless you're buying a commercial property that's cash flowing or renting or whatever, you're holding on to something that is, susceptible to those changes. So I think that a digital business has that combination of both offering cash flow or a dividend essentially, and a value that can, an asset value that can continue to grow if it's operated properly. And so I think there's going to be a ton of opportunities in the online space in the digital world going forward, but it's not without its risks. I mean, none of us can control the macro environment, but we can prepare and mentally and find businesses that will sustain or even thrive in those environments. And I think that's what's exciting. In this asset class. So I mean,
the ability to work from anywhere, right? Too, I mean, just to really have control over. I mean, that's been a huge theme over the past year with this. Yeah,
and particularly with people, there's a lot of politicization that's gone on with the COVID-19, and the mandates are kicking in. I mean, Germany's now locking down people. People are like moving out of states to go to other places where they're not going to be infringed upon. And from that standpoint, I know I have family that moved, went to Mexico to work because they're working online. They're like, why do I want to stay in a place that's, I can't go to the restaurants because I have a personal, opinion over the vaccine mandates or whatever. So all of these things are playing into it. And I think it's just, they're drivers for growth in this space. And I think that the freedom that a digital business offers an owner is, unparalleled.
Yeah. David, clock is running down, but those were great insights. I really appreciate it. Let's definitely do one of these again, please. Maybe we'll check in the first quarter of January and do another. If you're thinking of potentially selling your business in this market or acquiring one, check out Website Properties. They're definitely one of the big players in the space. David, we'll have all the CTAs in the show notes, but real quick, what's the best way to get a hold of you?
Directly, people, they can obviously go to websiteproperties.com to look at our listings. They can reach out to us through there. People, if there's any sellers that are interested in having a conversation about their business valuations or the process, they can contact me directly at dfairley@websiteproperties.com.
Perfect. All right, David. Well, thanks again for showing up. Really appreciate it. And we'll see you on the next one.
Thanks, Adam. Appreciate the time. Take care.
Bye.